Hello everyone, this is Dan Gramza and welcome to Advanced Gramza Market Studies for Wednesday, May 22nd. Greeting from Washington, D.C. Dulles Airport on my way to Rome, so I'm recording this a little bit earlier than normal. I know there's a number of people in Italy that watched the video, and for those of you attending the Italian Traders Forum on Friday, I'll be speaking in the afternoon around 2 o'clock. So if you're there, come on by and say ciao. I'd like to meet you. And let's start with these stock indices. The S&P, the NASDAQ, all these indices are really doing what we talked about yesterday, slightly higher. The momentum is still there, nothing telling us to sell it, but we know that the market is also waiting for comments from the central bank, from Bernanke tomorrow. We hear rumblings that they should cut back on monetary policy, as well as people saying, no, they shouldn't, it's not the right time yet. I'm in that camp. I don't think there's a reason for them to really cut back on that. And we're going to see these kind of discussions throughout the rest of this year. And maybe in the latter quarter it might be a time to do it, but right now I would not. As you can see across the board here, including the Dow, right here in the Dow, nice positive day, closing again at a new record high. Mid caps also the same type of position, and the NASDAQ market kind of very balanced here. See, the shadows are equal on both sides. Typical kind of behavior. You're seeing it move a little bit because these are live markets we're looking at. Same thing for the S&P. Now, since I'm talking about this before it closes, who knows how we're going to finish the day out. But based upon what we're seeing right now, it's very balanced. It's the right kind of behavior coming into this kind of market information. If we look at the currencies here, we see that the euro did trade back up above that bullish level. The difference between the bearish level and bullish level there is 70 ticks. The new bearish level for that market is 128.15, and again, I'm not suggesting anyone should get that return, but it gives you an idea of what's happening here for that market. Swissy, sideways market, and I'm looking for that to continue as well. Remember, the bearish level here is 102.65. Japanese yen, nice and soft, sideways move. It's where it should be. It's behaving, I think, normal. The sideways move is appropriate based upon where we are globally and also where Japan's recovery is kind of coming into play. Australian dollar, I thought, would get stronger in today's action. And I should say in Tuesday's action. We're not seeing that. We're get a little bit of buying coming in here, as you can see on these lows, but we're not seeing the level of commitment that we want. The Asian session for this market is going to be very important. The bullish level for that market is 98.30. When we look at the British pound, we're seeing some weakness coming into that market, expecting that also to continue. Not looking for anything dramatic here at all in that market. Canadian dollar, depending on what happens with our stock market, we should get a bounce here. Also, if crude oil firms up, we should see some buying coming back into that market. Right now, the bullish level there is 98.20. Let's move over to the interest rates. Short end of the curve, 90-day paper, sideways move. It's exactly, again, where that should be. I think that behavior is right on target. 10-year notes, very balanced, just like it was the previous day. And again, this is logical when you think about what's being brought out in Wednesday's comments from Bernanke. It's the right way for the market to position itself. There's nothing unusual there. 30-year bonds, the same type of thing. This is the bullish setup. So there is some buying coming in here, and I think it's more profit taking in front of the comments than anything else. In the gold market, we're finding a little bit of buying coming in here. We talked about how it was going to move over the last few days. We discussed that yesterday would be important for us, and again, we're seeing that potential double bottom type action here. We are finding buyers at this level, but notice today's action, you're not seeing any kind of follow through. You're having a market that's opened higher and found sellers. And that's also indicative of the uncertainty that we see out there. Remember, the Fed policy that we have, it's not sanitized as they've done in Europe. So there is the potential for inflation, but we have not seen the market react that way at all with regard to gold or silver. You can see selling coming into that market. Same kind of position, very neutral. If buyers were here, we should see them now. We talked about that, and right now we're just not seeing that. That implies, again, a setup going into Wednesday's action. Should be an interesting day. copper is making new highs, and we're seeing that sellers are coming into that market as well. I'm not bearish this market. I still believe the upside is there. I don't think China's consumption or the supplies we have available are enough to really make this market drop off. So near term, I still feel the same way about it, but it has challenges here, right? Where you see that selling coming in from before, that's what we're cautious of now. So from 380 to 34 or 340 even, that's a big deal for us. And you can look in the action that we've seen so far today, selling coming into that market. Now let's move on. Take a look at that energy market. You see the weakness in crude oil. Even though the stock market's getting stronger, you're seeing also the dollar getting stronger. If you look at the euro, for example. So we have an equal and opposite up here, which is a sign of rejection. This is as bearish as this was over here. All right, it's the same kind of behavior. And that would imply lower prices. I think it's still dependent upon the dollar. And I'm not looking for a dramatic move either way right now for that market. Natural gas has perked up. It is the right kind of behavior to get that close above that shadow that you see here. Now in natural gas, the sell level, the bearish level here has moved up to 404. And the bullish level here for that market was at 398. I'm looking for a continuation to the upside for natural gas. I'm not bearish that market. Soybeans also continues its journey. Now, the bullish level in soybeans was 1386, and right now we want to move that bearish level up to 1452. Again, no sign of selling. We want to go with the strength that we see here. But on the other hand, take a look at corn. Corn, as we've talked about, there's just too much uncertainty out there. Although the setup we have here, if you look at this benchmark candle, is bullish. We are looking for followers. We're looking for buyers to give us follow through here to the upside. Wheat, although it's going lower on buying, we're not seeing any follow through with that market. The bullish level has been tightened up to 689 for the July contract. Well, that concludes today's Advanced Market Studies. Thank you for sharing part of your day with me. Looking forward to being with you again, and in the meantime, take care.